Obviously, you're a big believer in growing Buffalo's ecosystem, but what do you say to folks that are like, you have to do YC, you have to go to San Francisco, it's the only way to do it?
There is always that pull, or at least the narrative, that you can't do it anywhere other than these places. And for me, the more people tell me to do something, the more I want to show them that I'm going to do the opposite and I'm going to show them wrong. So don't tell me what to do, basically. So I was really convinced that you can build, and there were some examples of people who built successful tech companies in Buffalo prior. But for me, it was like, we can do this. We can raise venture capital, and this is what I'm going to do. And we were able to do it. And we raised from some of the biggest funds in the world, and we're able to do it and scale it here in Buffalo. And it's interesting.
Dan, thanks for being here. It's great to meet you, and really excited to talk to you about a whole bunch of things, including the venture studio that you've launched in Buffalo called Radial Ventures. I know you have a long history in the tech space as a founder, as an investor. I think way back when as a programmer and system analyst and a whole bunch of stuff. So we won't go through the whole long and winding road history. Want to focus on the venture studio, but maybe first how you got there. And I think ACV Auctions is a company you started that you took public. Would love to learn a little bit more about your background to kick off and dig in on ACV, and then we'll jump into the wonderful world of Buffalo.
Sure. Perfect. Thanks for having me. Really excited to be here. So my background is really, has a interesting winding between very technical and going then more towards the business side. So software engineer, ended up running an incubator and venture fund here in Buffalo, New York called Z80 Labs back in 2012. That was really a big pivot, for me, doing startups and doing technical work, and then getting into the venture world and understanding how that works, and got to work with some really great venture capitalists. And from there, kind of got bored doing a lot of the investing, advising, showing up every week to the advisory meeting. Hey, remember that stuff we talked about? How are we doing? Oh, we're still in the same spot. Okay, all right, we got to move faster. We got to do, and at my core, I'm a builder, and I like building product. I like building companies, and so for me, that wasn't enough excitement. So started looking at what I was going to do next, and actually had someone apply to our incubator, and had this idea in automotive. He was a used car dealer. He was out in Albany. He had moved to Buffalo and was working at a new car dealership, and really saw inefficiencies in the wholesale market for used cars. Interesting enough, my dad was kind of a small-time used car dealer. And so in my past, I was used to, I understood about auctions and somewhat how it worked and car dealers. And so for me, seeing that, it's like, okay, this is interesting. I can build this. And so we started the conversation from there, and really kind of ran them through the program in terms of, what are we building? Who's the customer? And fortunately, I knew enough about that. And we got to the point where it started nights and weekends. Working on it. I pulled in another founder, Jack Greco, to kind of round out the team, and we started building. And like I said, it was nights and weekends, and eventually left the incubator, and we went full time on it. We sold our nice houses, and part of the beauty of Buffalo is you can downgrade to a nice 1,500 square foot 4-bedroom house in a nice neighborhood. With a 15-year mortgage, and have a $1,200 a month bill. So it was great. But we did that, and really started growing ACV. This is around 2015, and raised $1 million locally, which was a pretty significant raise at the time. Got the product to market within about 5-6 months. Sold the first car we launched on our marketplace, and we were kind of off to the races from there.
And so tell us about, you did take the company public, I guess, in 2021, right?
Correct. Yeah. So, and it was obviously a long, interesting path going through it. We had raised $350 million total from the Bessemers and Bain and Tribeca and SoftBank Capital, Armory Square, and a whole bunch of others. Over that time, the team grew from the three of us in 2015, and I think it was a little over 2,000 by the time we went public. Building the engineering team in Buffalo, we actually opened another engineering office in Toronto. So as we grew and expanded the team, interesting things of going from a single product company, becoming a multi-product company, then becoming a multi-office company, and dealing with a lot of that hyper growth. We were growing 350% year over year for 5 years, and so there was a lot of, and especially during that time, blitz scaling was a big buzzword that you really don't hear much of anything about anymore. Doesn't quite work right now. But at that time, it was really, how do you grow? How do you get into new products, new adjacencies within the business? And for us, and really for me, it was a great example of how do you scale and mature your team so that you can add more people and go faster. But at the same time, it's we're an auction platform where dealers could sell used cars between each other, as opposed to sending their vehicles to a physical auction where it ran once a day, once a week. So we built that out, but then we had to start thinking, okay, what's next? And we had a really interesting, unique advantage where we had our software in inspectors' hands across the country, inspecting tens of thousands of cars a month. And, we kind of looked at it and said, this is an interesting advantage. A lot of times you think having people is maybe a disadvantage as a software company. But in reality, we had people that were trained by us, staffed by us, using our product and collecting inspection report data on it. And this was really the first point where we kind of realized, okay, there could be something there, but it's not core to what we're doing. And we spun out, and we weren't calling it Venture Studio or anything, but then we called it R&D, right? So I basically built a walled garden where I said, okay, we're going to dedicate these resources. We're going to work on moonshot projects where we can build hardware, we can capture unique data, and we can start doing some machine learning and computer vision stuff on this and see what's there. But it may actually fail and not work, but we'll keep the core business going, and we'll make sure we're dedicating the proper resources to these low risk or high risk.
High risk, yeah. So you ended up becoming a big company that was spinning out little companies.
That was the goal, and we kept it internal. And so the goal was, hey, we want ACV to be the first customer. And so, we started building out these products, learned a lot about how you have to kind of guard the resources. Every company at its core has a longer roadmap with not enough resources. And there's always that urge to just pull a couple engineers over just for a little bit, which ends up diluting us. So we did a really good job of keeping that separate, but we were able to build out products in the inspection space that we were able to get patents. We were able to now add a whole bunch of validity to the core marketplace of what we were doing, because we understood, what the big change was there. And obviously going into COVID, when everything went online and became remote, we had that advantage of being able to perfectly describe a vehicle, just through sounds and vibrations and undercarriage photos and stuff like that.
I think it's fascinating too, given the fact that you're such a builder and you effectively spun out from an incubator and then took it the distance, right? That's in many ways the dream that a startup founder has. And then you had the insight, being part of the organization public, to look at growth innovation beyond the core, not to stifle it. When you think about just the portfolio construction, as you just described, of some of these ideas that were on the adjacency, what lessons have you learned, being in a large organization that can apply well to kind of the studio frameworks?
Yeah, and I mentioned some of it. It's really around, at first you have to have leadership bought in, right? From the board level on down, and saying, here's the opportunities we see, may go to zero, may take a lot longer, but here in the future is where it starts tying in, and here's the benefits, and here's the doors it can open. And For us, it was seeing, hey, maybe we are more than just an auction company. We may be a whole automotive landscape, and what are the different pillars there? So, it's getting that buy-in and having that discipline to say this team is focused on these very hard things that will take a while. You have to keep the communication going at the board level, and honestly, people get very excited about this stuff too. So it's always, hey, how's this stuff going? Maybe a little more interesting than the incremental update product. So, but we use that as an interesting way to bring in new people and keep people excited. And really, from the investor standpoint, as we were going out raising rounds of capital, doing this added hundreds of millions of dollars to our valuation, because we're now viewed as this automotive solution company, and really we can do inspections, we can sell. Now we're adding financing, and all of this stuff makes you more than just a one-trick pony. And they can see that it's more than just whatever the initial thing it is that you're trying to solve with the company. So it's great, but there is that discipline that you really need to have and focus. And it is tough at times, even when you have the buy-in and there's some big product release you're trying to get out, or deadlines you're trying to hit, and being able to say no and maintain that focus is huge.
Right. So you didn't spin them out into separate entities. They were effectively product lines, subsidiaries, lines of business inside ACV Auctions, right?
Correct. The goal was, in the mandate I kind of had from the beginning, was we're building this as though we are going to spin it out. And ACV is the first customer. I don't know the current plans have been out for a while. Those haven't been spun out fully. But the way we built it and the way we thought about it, and at least the mentality of the team, was thinking beyond just, okay, we're going to tightly integrate with what we're doing, and we're going to do it the same way. We're going to do all this. It's, how can anyone connect into this? How can, we move data around? How can, when you think through it that way, you build better solutions, and it gives you that optionality that you then don't have to go back and rewrite things and rebuild from scratch. So.
And did you pitch effectively a vision over what sort of time horizon, building out multiple ventures? Or was it just seeing how it would go and then taking more of an executive decision based on priorities?
Yeah, we had a couple initial ideas around what we wanted to build. And there was two really, big ones that, being in the business, we understood. So the first one was the sound of an engine. So we essentially said, we can record, we're looking at inspecting 50,000 cars a month. We can get the sound of those engines and build it out in a way where we know we're going to do a bunch of machine learning on top of it. So tag it, make sure the data is clean. And we can basically build Shazam for car engines, right? So you can understand, is there an issue? Then eventually the models get better. You can tell what the issue is. So we started building that, from that premise, and built some hardware to ensure we were doing it. And so we're like, okay, we're gonna work on this one first. We think we can get some good traction on it. We had rough time frames, but especially when you're doing some hardware stuff as well, it gets a little fuzzy. But but we had enough latitude to say, here's the plan. We're gonna do this, and then we have this other really interesting idea, and we'll do some research around how we can get it done. And that was really, how do you scan the undercarriage of a car without having physical infrastructure, permanent infrastructure built out? Because we had dealers that would get the cars that they bought off our platform, put it up on a lift, and see that there were issues. But putting it up on a lift is tough and time consuming, and no dealer would let us do it. So we built these little devices you drive over, and basically scans the undercarriage, and allows us to say, is the catalytic converter missing? Is there rust or rot or any of that kind of stuff? So, so we knew there were tricky problems without, there were kind of non-trivial problems to solve. And we were given a good, enough of a leash, but made incremental progress along the way to where it was exciting. And as, our business was growing and we started seeing how this could help prevent different arbitrations on the platform and increase customer, happiness and all that great stuff, there was still that buy-in to the longer term future. And I think it took, the first product, I think maybe about a year to really get it out. And then the other one was a fast follow, probably another 6 months or so after.
Were any of them material from a revenue perspective? Because you said, by virtue of doing this kind of beyond the core innovation work, new venture building, it added, I think you said hundreds of millions of dollars of value. I don't know if that was on the fundraise side or on the stock side post going public. So that's one part of it I'm curious about, because we get this question a lot from folks. Like, I'm a big company, I want to go build new ventures. I'm trying to measure the value creation because I'm not sure it's just going to be revenue, because we make whatever we make, billions of dollars, 10 million bucks down here doesn't matter, but there's other value that gets created as a result of that. So maybe you can just speak a little bit to how you thought about the value creation, and did any of them become material from a revenue perspective?
Yeah. So for these in kind of the area we were going in, and I guess to answer your first question, it was really more in terms of market cap, right? In terms of hundreds of millions of dollars, in terms of market cap, being able to expedite your fundraising, or maybe even allowed us to close certain funds that we were pitching from a venture side. So there's that piece that's a little squishy, but definitely, that was an area they were very excited about. They wanted to drill into. We would bring them to Buffalo and show them around our facility and meet the team. And, that was always a big highlight. So I'm confident, but yes, it's definitely a squishy piece. On the other side, part of the auction business and the business of ACV, you're selling, tens to hundreds of $1,000s asset to people who haven't physically seen and touched the car, and they're relying on us to do that. So the better tooling we have, the less issues that come up in terms of you missed something on the inspection, it's not what I thought it was, and then needing to either unwind it or deal with different compensation. Because we also had a product that was around assurance, right? So you can, in essence, a warranty, where you could say, okay, I'll pay for this, and the company will cover anything that's missed. And so for us, it was really more, how do we cut those costs down? How do we remove those bad experiences that cause customers to churn out? And so that was really more the lens we viewed it as, because we weren't kind of going out and selling it.
So it wasn't a revenue generating thing for you. It was more a value prop to the core customers, create more value, lower churn, lower problems. Were you able to quantify it ever?
I think they have over time. I mean, I think it's been a little after I've left, but they've gone through and looked at arbitration, especially, as I said, you start understanding the dynamics of engine noises and what those are associated with. You can then go back and say, okay, this is something we would not have caught. If it's a blown head gasket, that could be a very expensive, so they have gone through and looked at it from that perspective. I don't have the exact numbers on it, but yeah, it definitely is something that, as you're cutting away, what could be your biggest expense as a company, that becomes a very impactful thing, especially as you go public and now you're reporting this stuff out quarterly. A lot easier when you're private and you're just going to your board and, we're working on it. We're getting better. The street has a much different opinions on that quarter by quarter.
So on that topic, Dan, just the evolution that you described from, building out and yet so much success with the venture studio model so far, did it evolve into having more an established venture board to help with some of that communication because you're public? And just some thoughts or any insights from that kind of experience of being able to kind of scale and grow the venture studio model?
Yeah. I mean, within it, we had good communications with, on investor days and things like that. We didn't have, I guess, a more public board on it, but, we built a really great team internally. We had a team of great investors and board members and really other industry advocates that we were working with. So from that perspective, we had it, but we didn't have an official board that was in place kind of managing a lot of it. It was really more, CTO, the people I had leading it, and us going and presenting up to other execs in the board.
Got it. Interesting. So let's jump to Radial Ventures. So a couple of years later, you decide with a few other folks to launch a venture studio for the Buffalo ecosystem, because the whole time you're in Buffalo building ACV, you were in Buffalo before that. So clearly care deeply about the local ecosystem. So tell us about making that jump from, hey, we've done this at ACV a few times. We built a couple of things. They're creating value for us. And then and I know you were involved in 43 North, which is, an accelerator program for the Buffalo startup ecosystem, very successful. And now you decide to do Radial Ventures. So maybe walk us through how do you get to that place, and then we can dig into things about the studio design and what your plans look like.
Sure. Yeah. So a long kind of path in terms of way back when I was running Z80 Labs. We had $5 million fund. We were kind of the first real tech-focused incubator for high-growth companies. And so you get a lot of, we were seeing a lot of early-stage founders, not, could be single founders. Maybe they had parts of the team. They didn't have a lot of money, but, we weren't putting money in unless like they had the team and were full-time and could raise matching funds. And so we kind of got in this chicken and egg kind of scenario at that stage. And, me as a builder, it was like, if we had a team, when these, the good ideas coming in, interesting markets, stuff we wouldn't have thought about, but they just need help on that execution piece, right? And so that was a piece where I felt, and it wasn't part of the model of what we were doing, but I felt it was something that was missing. And so as time went on, and really with ACV, I kind of put some of that into practice where I had a network. There was an idea that came in. We worked through the idea. We started working through the product and the go-to-market and pulled in, different team members that we needed, and we're able to grow it and investors and all that stuff. So that was maybe like the initial test case. Can we do that? Can we do it in Buffalo? Can I leverage my network to be able to do this and take a good idea and grow it into a large business? So getting out after ACV, started doing a lot of angel investing, advising of companies, and, really started seeing, similar things with, when your first check in kind of stage, first time founders, you see that they're starting, they're trying to learn through stuff and you're advising, but it's not your company to run, right? And so you can almost do only so much. And you can't go and join all these companies full time and go and build it yourself. So it kind of leads you to this conclusion of, okay, if I'm putting capital in and hoping people figure it out, or should I get the band back together and get a team of people who have gone through that 0 to 1, have failed, have succeeded, have gone through that scaling of a company as well. So the longer trajectory, the playbook, what you need to do now to prevent a $3 million rebuild and opportunity cost lost down the road. So started talking, and Eric Reich is a guy I've known for a long time here in Buffalo. He's had successful exits with Campus Labs. And this was something we were kind of chatting about even back in the Z80 days in 2012 to 2014 or so. And the 43 North Foundation was established. So 43 North, the business competition, they give $1 million prizes out. There's $5 million in total prizes every year for companies to come to Buffalo, build their business. ACV was one of those companies that won the $1 million. So they had equity stake in it. And on our IPO, they did very well on that. And the foundation was established to invest in the startup tech ecosystem here in Buffalo. So there's a couple pillars around talent and corporate connectivity. And one of those was Venture Studio. And it was a piece that we saw was missing from the Buffalo ecosystem. There's a ton of other programs now in terms of accelerators and advising and early stage capital. There's tons of this stuff now. But for us, it's let's not wait for two people to meet at the right event with the right idea, get the right traction, and be it, let's just force that to happen. And we'll kind of take the company creation into our own hands. And so this 43 North Foundation has $100 million initiative that they've kicked off, and 20 million of that currently is going into getting the venture studio going and getting to where we're creating new companies here in Buffalo, and really handling the full end to end from engineering to go to market. And how do you take that idea, put all the right stuff around it and try to de-risk it as much as possible, to hopefully see more and more of these ACVs pop up.
Such an amazing story of the full life cycle. I'm curious if you can put a bit of a spotlight in some of the unique assets that Buffalo's ecosystem has to make it such a fertile ground to be, establish this venture studio in this domain.
Sure. Yeah. And it's obviously an underrated market, and I think we don't have the Googles and others here, which in a way is a downside, but in a way it's a nice opportunity, right? So I think Buffalo in general, like kind of as we've been talking, there's good momentum, right? We have buy-in from some of the state level participants in terms of funding and programming. We've had the grassroots movement in terms of, me and others back in 2009, just putting on startup weekends and other events, and that's kind of evolved. We have the universities where they're training students in entrepreneurship, and even the hardcore computer science students are in startup competitions and, learning about building business. So we've built a lot of these pieces over the last 15 years, I'd say. Brad Feld's Startup Communities book was like a big thing we were all about, and he says it takes 20, so I guess we're 5 years away. So I think there is really good momentum. The University of Buffalo has 3,000 computer science students. It's has some of the most computer science students in the country. And like I said, there's just a lot of this programming, and the community itself is seeing startups and this type of work and generating a lot more of these smaller companies that can grow and scale to be the path for economic development, unless we need to bring a factory back or we got to do, a lot of these older school. And so as we're getting more innovative leaders and younger leaders coming in and maybe taking over legacy businesses, they're now seeing that and saying, how do we help? How do we get involved? Because more startups, more more jobs, all that stuff is really, really great for existing corporations and businesses. So,
right. I mean, we're in Toronto. It's not the coast. It's not San Francisco or New York. I used to live in Halifax. Worked at a company that exited to Salesforce. So, I've lived the secondary, tertiary market world, and obviously you're a big believer in growing Buffalo's ecosystem. But what do you say to folks that are like, you have to do YC, you have to go to San Francisco. It's the only way to do it. Don't waste your time, be it Buffalo, be it Toronto, be it Halifax, be it anywhere other than there.
Right. Yeah, no, it's a great question. And it's one that, all through my career, it's been, you're in tech, you're in, like, you got to go to San Francisco. You got to go, you got to go to the Valley. You got to go to the Valley.
There must have been pressure for you as you were raising money for ACV also, like, just move already.
Honestly, that's an interesting story. So I can get to that because I think you feel that a little more on the West Coast. A lot of our investors were actually out in New York City. And it's usually good to, you're going to raise from West Coast or you're going to raise from New York City. Never shall the two blend. But so in New York, 50-minute flight from Buffalo, very convenient, right? So we're there, and I mentioned we opened an engineering office in Toronto, and later on at ACV. And as we were evaluating where we were going to open this other office, we went, through all the different cities and where should we go. And we're like, well, we could do New York. We have people here. They're like, you are not allowed to come to New York. It is too expensive. Google's throwing crazy money at everyone. We can't. And they're basically like, you are not going. Like we see what rent is, and we see what salaries are in Buffalo. You are not coming to New York City. So it was kind of a funny, but there is always that that pull, or at least the narrative that you can't do it anywhere other than these places. And for me, the more people tell me to do something, the more I want to show them that I'm going to do the opposite, and I'm going to show them wrong. So don't tell me what to do, basically. So I was really convinced that you can build, and there were some examples of people who built successful tech companies in Buffalo prior, but for me, it was like, we can do this. We can raise venture capital, and this is what I'm going to do. And we were able to do it. And we raised from some of the biggest funds in the world, and we're able to do it and scale it here in Buffalo. And it's interesting. But yeah, it was always the new city, Miami for a while, and Austin and whatever. Oh, you got to go there. I'm like, what? No, I don't. If you have to go there to be successful,
you love the Buffalo winter so much. You just
I love it.
Had to stay. You had to stay.
Right. Bring it on. Yeah.
Heads down to execute with the great weather conditions to do that. Right.
You can't have a Miami beach and trying to get work done. Come on.
Yeah. One interesting thing, I mean, you talked about so much momentum in the Buffalo ecosystem. You kind of touched on it a little bit. Maybe we can double click on how you be able to get successful private-public partnerships, collaborations. Because I think in many ways, when we look at unlocking and creating unfair advantages for any startup anywhere, regardless if it's in the coast or secondary startup market, unlocking those assets really becomes a real reinforcing factor of creating value and why you want to stay being headquartered where you are. So maybe you can talk a bit about the success you had that, because even in major startup ecosystems, it's really hard to kind of unlock that value, and you've been able to do it.
Yeah. I mean, I feel like being in the community and being someone who is an advocate for what we're trying to do and can sell that vision, and you have to be fortunate to have people in the private sector, but also in government and in the universities really start to, maybe put their egos down a little bit. And maybe you want to help their ego and encourage them to, participate, depending on how you play it. But really, have that common goal. And really what we did was say, like, this is our path forward, right? As I mentioned before, there's not a big factory or like Google or anything. No one's coming to save you. Like, we have to save ourselves. And how do we do that? And it's really just trying to work together and finding the right folks that can be the advocates. Obviously, if you have people who have built companies that are successful, and you can leverage those folks that give credibility to this, that it is more than just a government program. There's real people behind it who have been there, done that are helping shape it. And how do you continue to build that? And that's fortunately what we had with a couple entrepreneurs and venture capitalists that are from Buffalo and lived in Buffalo, that wanted to see Buffalo go in this direction, and were able to sell that story and leverage their reputations and what they've done to do it. But it definitely took time, right? None of this was, like I said, we're 15 years in or whatever, so it's little by little, how do you get funding? And then you have to have some success, right? And if you can get those, those success points, I think that's what opens the eyes to people who maybe weren't initially in, and you can start growing that support, that entrepreneurship, startups, existing corporations helping startups, be that first customer, take the meeting with them, invest in them, all these different aspects that play into kind of building on that momentum.
So are you in the studio, are you looking at whether it's industries or verticals or ideas or founders that you think could drive business through collaboration in Buffalo? Like, oh, we have this industry or this big well-known company, and if we could just solve problems for them, that would be a great way to start a company. Are you trying to align that? Or when you look at the venture studio, you say, we're going to look at any idea certainly you're trying to build big businesses, but do you want to try to start with that first customer or partner being local?
We're doing a little of both. On the one side, we're looking for companies, and really what we're seeing, and the beauty of Buffalo is you see a lot of these unsexy businesses that aren't in Silicon Valley or these other places, right? So we're getting exposure to really interesting industries that you're like, wait, how big is this? Like, how many people still do this way? So we're able to go in and look at those and look at, for us, what's interesting is what are these companies and industries where growth is limited by, can you find the right people? Can you hire them? Can you train them? Can you retain them? And now we're looking at all the stuff coming out with AI and a lot of these agentic systems that are out there, and they can solve a lot of those problems. And so how do we take a lot of this new AI stuff coming out, apply that and solve the limiting factor on growth for these companies? And a lot of these companies and industries are in our backyard. And, so there's companies we go to as part of our validation process before we're even going. Fortunately, Buffalo is a small enough town. Everyone's like, a phone call away for us and our network to where we can say, we have this, we're going and we're trying to, work through this idea. What do you think about this? Here's how we're thinking about going about it. Here's how, and getting feedback. And the feedback is usually, we got, I wanted to build this myself, but it's not what we do. Can I invest? So we're actually getting investors along with just customers, which is a nice problem to have. But so there's that approach. We've also had big companies come to us and say, we like what you're doing. We look at our business model. We're looking at the broader market. There's some real headwinds coming our way. And we know maybe we need to go from being more hardware focused to software focused.
Right. So they're proactively coming to you to like, hey, this Dan guy and this studio thing might be able to solve our problems.
Exactly. And so and that's what we're trying to learn. As we go in, we understand the problems with the business, understand the problems with the industry, and we're trying to pull out, are there commonalities there or something that we can do and build into a company, solve it for them, solve it for the broader market. And so that's the piece, we're 6 months in or so we're still kind of figuring that piece out, and whether that needs to be maybe another entity under the studio that is focused solely on the corporate. Obviously in different corporations, there's the pace and potentially the technologies and where they're at in that life cycle to where it's like, wow, we actually need to do a full digital transformation before we can even get to the point where we're looking to leverage your data and spin out a new company. So we're trying to think through how we do that. Fortunately, in terms of the foundation, a lot of their goal is how do we bring in the corporate players in and show them what's going, so we're trying to figure out how we can take advantage of that and help these companies, but also spin out new companies. So piece we're still figuring out, but there's definitely appetite.
Yeah, and just curious a bit more how you're applying AI into your studio processes, and just as you're building and funding from that 0 to 1 phase. Maybe you can talk a bit about that.
Yeah. So we're totally AI forward on all the stuff that we're doing. We're really the first part that we set it up is our validation process, right? So, Gemini Deep Research and, all these different tools, N8N that we're using. How do you take an idea and not have to hire an analyst that's going to go spend a couple weeks, do a bunch of research? So we've built this nice funnel in. If you go to our website, you put in your idea and we take it through, we build a memo out. We then have another AI that goes and beats up what that memo's assumptions are to make sure it's not,
AIs arguing with AIs.
Yeah, AIs fighting each other instead of people yelling at each other. So it's great, a lot quieter. And then we, what we're building out is now running that through like, what's our preference? Like, what companies do we want to build? Is this a consumer company? Is it, so we can start doing some ranking on it, but then also understanding, okay, here's the proposition, here's the idea, here's the competitive landscape, here's potential, business cases and stuff, business models. Now we need to find, okay, who do we know in this industry that could go and run this? Our goal is to build the company up, get it going, and as soon as we can bring in, ideally the idea person is the subject matter expert that'll go along with it. We understand that may not always be the case, but we want to build that leadership team out. So as part of this process, it's who's in our network that we know that's in this industry, and what is that dream team that's part of our bench that we could put in and see. So if we have two ideas and they're both multi-billion-dollar potential opportunities, but one, we have a great founder with industry experience, we may go with that one first and get that going. And then in the background, we say, hey, we need to go find someone in this industry with this experience that's interested in coming and running this. But the goal, so that's how we're leveraging it. And the beauty is that process takes 5 minutes to do. And so we're not bound by, we still have a backlog of ideas we got to go vet and figure out. We're getting that pretty instantaneously, and it's been super helpful for us evaluating the ideas.
Right. And can you share a little bit more about how the studio works? So equity take, amount of time something's going to be in the studio, how you thought about the services that the studio provides to, let's say the founder submits an idea, it gets through that AI, you're like, that's a real thing, you vetted it, you're like, we want to go do that. How does it work from there? You're incorporating the company, putting capital into it, just whatever you're comfortable sharing about, like, how did you think about the deal structure? Because also we see, in our experience, a lot of chatter around how much equity does a studio take so that the downstream investors are okay with it. And so I'm curious about how you've worked through those design parameters.
Yeah. So in terms of the structure of it, so if there's an idea that we want to move forward with, we've only moved forward on one so far. Like I said, we're still getting the studio and this first company going. But once we have that idea, that we'll go and do some rapid prototyping. So really, before we start actual development, we still want to go and validate. With the tools today, in hours, you can have a fully functional prototype that we can go in our network, go to the right people, pitch, show it to them, get feedback. And so at that point, if it's a go, then what we'll be doing is deploying a fully cross-functional team, depending on what it needs, onto that, so that we're basically fully, founders involved with it, working with the entrepreneur, assuming the entrepreneur is coming along, and building that out and hitting those different proof points. A big thing that we're trying to do in that process is, so there's so much repeat, and obviously a lot of the AI coding helps solve a lot of this, but all these startups are building all of the same base level systems. And a lot of times in an early stage, you're throwing stuff up and you're trying to get it going. And if the company fails, then that's okay. But in the instances where, and I've gone through this and seen this at many companies, where you don't have the proper diligence and the right structure in place from your server infrastructure, your code infrastructure, monitoring all this stuff, your data platform. And then you got to go back a year and a half later when you're trying to scale, new customer. So we're trying to build a platform on all that to where we can have a push button start. You have all of the stuff that's common, best practices right out of the gate, and we can start building on top of it. So the goal there is to help cut that time down. How do we reduce the cycle time it takes for us to get that product out, get it, and really start selling it and getting it to a point where we're saying, this thing has legs. We have the leadership team that we know that we can come and build it. We can go and spin this out. We can put some capital in it. We have a bunch of VCs that we work with that are interested, and we can bring in the other VCs, fund it, spin it out, go back to the next thing.
Yeah, I was going to say, can you talk a bit more about when you're engaging, or how things have changed and how you're engaging external investors, co-investors? So you just alluded to a little bit of it right there with having ready good VC partners, but also family offices, other angel networks. How are you thinking about it differently now?
Yeah, so we're still figuring that out. Fortunately, we're funded enough to where we don't have to do that to get started. But we have worked with a bunch of VCs in the past, and VCs that invested in me, that they're interested in participating. We're still working that out and what that's going to look like. And is it another fund that we create? Are they investing in the studio? These are still pieces that we're trying to figure out. Would love to hear what you've seen in terms of best practices, whether it's investment in the studio or it's investment on the way out. As you're spinning these things out, you have that group that's able to get a first bite of the apple.
Yeah, I mean, we've seen different models work. It always depends on the context with respect to corporates or just vertical studios themselves. But ultimately, we're seeing a trend of getting investors in earlier into that 0 to 1 process, like you described. Applying AI, the cost per venture has been reduced. The acceleration of getting traction in the market, but also really getting the right aligned co-investment partners around the table that are aligned on what kind of company you're trying to build. Like, you've taken a company the full distance. In some cases, I think the nature of venture building doesn't necessarily require traditional venture capital to achieve some of the missions and visions of each portfolio company. But it's something Ben and I have been spending a lot of time just engaging diverse groups of investors. And we certainly see the trend right now where it's not just traditional venture capital, even though traditional venture capital is certainly a lot more interested in the product of a venture studio.
Yeah, and that's the conversation we're having. It's really around, these are very de-risked. They're, and like even just down to the product and infrastructure side, like it's stable. You're not, you don't have these concerns. You don't have these concerns. There's always other concerns, but if you can limit the other concerns, or the concerns are a little more execution based as opposed to product or tech or any of these other aspects, or team based, it makes it a lot more attractive of an investment. And that's why I think we've had people reach out to us. We haven't been actively going out, but it's been more inbound. So we're trying to figure that piece out, and that's something we're working on, and that it definitely goes to the fact of what percentage are we taking, and that's something we're looking at. Whether it's a founder coming in and do they have 25 years experience and they've come with a full network and they've pre-sold some stuff to where they they're coming in and rolling, or is it someone out of school and they kind of had this idea and it's interesting but no operational, and or this is also for us. It's also an opportunity for people who, maybe, married, 3 kids, a mortgage, and all this other stuff, and they're working in their corporate gig, but they have this great idea, but I can't quit my job and go all in on this, but there's a big opportunity here. And so how do we structure the equity for someone that's doing that and maybe serving as an advisor or SME, but we'll bring in that management team. So yeah, I've read a whole bunch of the Max Pog stuff and other things around, and even talking to other venture studios and VCs around having too much of an equity stake. And I'm curious to hear where you guys are seeing the percentages or numbers, but I know it is a big thing where some VCs are like, we don't invest in venture studio companies because we don't invest. Yeah.
So the latest data that I've seen, it's not massively inclusive of every studio, is about 25% at seed. So, now is that before the seed round, after the seed round? How big is the seed round? It's all over the map. But we're almost at time, Dan. Maybe one question, last question I'd love to get your thoughts on, and we see this a lot with corporates that are trying to get venture studios off the ground, is about ROI. And there's an ROI, a financial ROI. Money is going in, time is going in. And they might look at it from that perspective, but they might also look at it from the perspective of brand ROI, which you talked about with ACV, saving money, saving time. So when you think about this studio, you have the capital from 43 North Foundation to do it. How are you thinking about ROI? For you, it would be maybe financial ROI for the studio, but also ROI for Buffalo. And how are you thinking about measuring that and what the most important thing is for you?
Yeah. And it is interesting because it is venture philanthropy in a way, right? Where we're, we have a fiduciary obligation to help. We want this foundation to grow in terms of its value and increase the amount of programming and things we can do for Western New York and Buffalo. So we definitely have the monetary return, and really it's around, can we build very successful companies that grow scale here in Buffalo? There's also the other aspect of, and really something I'm looking at is successful new companies created that would not have existed without us being here, right? Um, and so that's a huge metric. Obviously, successful growth. I think there are changes in terms of what is success. What is selling a company successful. It's great from a liquidity standpoint and putting money in people's pockets so they can then go and do their next companies or whatever they want to do. But does that mean the company's being shut down or shelved, or depending on the stage of the company, or someone going to buy it and kill it? All these things happen. Or depending on the IPO market, which is obviously more of a macro thing. But I think if we can see more and more of these companies grow, continue to hire, I do believe that companies are going to be a lot smaller with AI and all these different automations and things in place. So from that perspective, our job is to create more of these companies. We're not going to be creating 2,000 person companies. So now we got to create even more 130 people, 10 people companies, but building really interesting, jobs and things like that for people, and be able to retain more of that college talent that may be going to, any of the FANGs or, the Mag 7 companies. How do we retain that here for people who want to stay here and work in startups and give them that opportunity? So for me, it really is, are we returning the fund and in multiples, and are we creating new exciting companies, which is more of there is a way to quantify that, but there's also just kind of the feeling of that, and how, what's the energy we're building around it. How are people viewing moving back to Buffalo or staying in Buffalo, and really just getting that next generation, training that next generation of entrepreneurs that are coming up. And that was the thing I loved with ACV. There was a lot of people that may have come from not a startup, or maybe a 0 to 1 startup that never hit one, and got to see the growth and the pace you have to move at, and what decisions you need to make, and what are bad decisions or what are good decisions. You kind of learn all that so they can go and be the next founders, because they've had some time in the trenches. They have their scars, and are ready to go. And so for us, it's a lot of that, and as much as we can track that, that's our goal. But yeah, it's a lot of different aspects, which is a little interesting.
Yeah. So Dan, can you just finish off here by just telling us how we can find you online?
Yeah. So radialventures.com. I'm Magnuszewski on Twitter and Instagram and LinkedIn, and yeah, I'm around. But Radial Ventures is the website and the company.
Thanks again, Dan, for joining us.
Excellent.